You can go ahead and share too.
Go ahead and do it now.
Mhm.
Okay.
Welcome, everybody. We're going to let everybody have a chance to work their way in from the waiting room. And then we are going to get started. We have a great webinar here today with Darlene presenting on credit consulting basics for small business owners. My name is Christy Dudgeon. I'm with SBC Consulting, as well as Darlene. We are here on behalf of the Virgin Islands Economic Development Authority, who is administering the SSBCI program. And SBC Consulting is providing the technical assistance as well as the trainings similar to the one that we have today. So without further to do, Darlene, here you go.
Hello, everyone, and welcome. We're going to get started pretty quickly here on this webinar. I know that credit can sometimes feel like a daunting subject. So I hope that by the time we finish that you're feeling a little more comfortable with all the aspects of both personal and business as it relates to business. So we'll go ahead and get started now. So by the end of our workshop today, I'm hoping that you, first of all, feel comfortable on how to access your credit report, your personal credit report, that you feel like you understand the different sections of the report, that you are comfortable looking through that report and seeing if there's any inaccuracies that you want to work to dispute if necessary. And then if there aren't any of those inaccuracies, that we can find ways to put action into place to improve anything that you might find that you're not super comfortable with. Also have an understanding of what lenders and credit card issuers are looking at when they're determining if you are going to be credit worthy, and put an action plan in place that is comfortable for you and also realistic, because credit takes some time to fix. So we want to show you all those realistic opportunities. So first and foremost, why are we here? Why is credit important for small business owners? It's important for a lot of reasons. The most obvious, I think the one that we think of often, is funding. Credit plays a role in whether or not we are able to access funding, credit cards, etc., also, and SBA loans. But in addition to that, we need to remember that our credit affects things like our interest rates when we're borrowing money. It can also affect, not always, but can affect your insurance premiums and the cost that you're going to pay for that insurance that is important and must have for businesses. It can affect vendor payment terms, and also commercial leasing opportunities. So where it is very important to accessing funds from a loan standpoint, it's also important for other reasons as well. Something to consider. A borrower with, say, a 580 credit score is likely going to pay significantly more over the life of the loan than someone that has a 720 score. So not only does it affect the things we've already mentioned, but it affects the amount of money that you're spending. So it is important to have a firm grasp on what your credit is and how to fix that if necessary. Good credit can improve access to capital and reduce borrowing costs. That's the key takeaway, the important part of this. So there are two kinds of credit. There's our personal credit and our business credit. Personal credit is what we would consider what is linked to your Social Security number. It applies to your what your personal credit cards are, your personal mortgages, your personal car payment, etc. Your business credit, in contrast to that, is linked to your EIN. So it tracks your business payments. It's always important, obviously, to separate your business and personal finances. And this is part of that, having your business credit be your business and your personal be your personal. But it's also something that we need to remember, that both your personal and your business credit will likely come into play when you have your business and you start looking for funding. Credit scores range from between about 300 and 850, with 300 being the lower end, 850 being the higher end, and that middle of the road, 600, 700, right kind of smack dab in the middle. Um, your credit score is made up of different factors, with the two most important, or the ones that have the highest impact, being your payment history and your credit utilization. In addition to those, you have your length of credit history, your credit mix, and your new credit inquiries. We're going to talk first about the payment history and the credit utilization, and then we'll kind of talk about the others. So your payment history, 35% of your credit score factor is part of what your history is. And essentially, it means that they're looking at, are you paying your bills on time? Are you consistently paying them on time? Are you paying the amount that's owed at least? That's your payment history. It's important to note, as we look at this next slide, which is going to talk about credit utilization, that there's no single action that's going to improve your credit overnight. It is a process. We have a slide in here that's going to kind of give you a idea of how long things take. It results because of consistent positive financial behavior over time. So it's a process, but we'll talk about that several more times. We're going to hit credit utilization here in a moment. So let's just touch really quickly on your credit history, which is worth about 15% of your total score. The length of your credit history is exactly as it sounds. How long have you had open credit? Credit mix is, what does your credit history look like? Do you have mixes of loans and credit cards? Or are you just credit cards, just loans? It's a mixture. The mix represents that you have different credit going on, and more of a mix shows you more of a well-rounded borrower. New credit inquiries represents about 10%. So we hear about people saying, was that a soft inquiry or a hard inquiry? Is that a hard pull? The hard pulls are the ones where you're applying for a credit card, you're applying for a loan, and those credit servicers are hitting your account and trying to see what your scores are, et cetera. Those are going to be your hard inquiries, and those do count against your credit number. So that's why it's super important to not apply for things until you're really ready to do that, because even the act of applying can actually reduce your credit score. So you want to be very, very intentional when you're having credit inquiries hit your report. So then, as I said, our next slide talks about the other really important one, that of the 1 and 2 pieces of your credit score. So your credit utilization is what this represents. Credit utilization represents how much of the available credit you have you're using. So for example, if you have a $10,000 credit card limit and you have a $3,000 balance, you're essentially using 30% of that available credit, and your utilization for that is 30%. If you have a $1,000 balance on that $10,000 credit card, your utilization is about 10%. The lower the utilization, the more responsible the credit management appears, and often and does increase your credit score with that lower utilization. An important number to remember, if you take anything away from this, you want to stay at 30% or below. That is your goal. There are quite a few credit myths out there, and I'm just going to touch on a couple today, or 3, I guess. The first myth is, if you're checking your own score, that can lower your credit. Again, what we said before, the soft inquiries, the ones where you're checking your credit through Credit Karma or your annual credit report, those are soft inquiries, and they are not going to hurt your overall credit score. The ones that bring your credit score down for a minute, it doesn't last forever, it bounces back, but that you'll see the reduction would be if you actually have a lender or a credit card hit your account to evaluate your credit. So, but you checking yourself is not going to hurt that. Closing old credit cards always helps. Well, this lends to our credit history factor, and that is, if you can continue to close things, then that credit history, that time that you've had the credit, lessens. So it's often better to pay that credit card off or keep it at a lower balance. But obviously, if you're paying it off, then you would have the opportunity to close it. But leave it open and leave it at your zero balance, because that's going to increase your credit history length of time. And another myth, paying off a collection that you find on your credit will automatically remove it. That is not necessarily the case. We'll talk more about this as we go through the presentation, but if you do pay off a collection, make sure that you're in contact with your creditor that is involved with that. Keep really good records, ask them to help you with that removal. Oftentimes they can. It's a give and take that you'll have with the conversations with them. Keep good records. But paid collections can stay on your credit report. It'll show paid, but it will still be there for a while. So unfortunately, again, it goes back to that fixing credit is an instant. There's a process to it. And as we're going to talk about here in a little bit, communication is extremely important. How do lenders evaluate borrowers? So again, we often think, what is my credit score? Is my credit score where I want it to be? Then that's good enough. And in a lot of ways, it's important. I mean, it's extremely important. That's definitely a factor. But it's also important to remember that both from a business standpoint, your personal credit history is going to come into play as a whole. Your business credit profile, if it's up and running, is coming into play. And then if you're looking for a loan, your cash flow of the business, the financial projections that you create, showing your history of the money that you've made in the business, showing what your repayment capacity is, your time in business, banking history, all of these are important pieces that your lenders are going to be looking at. So where credit score is important, it's not the whole thing. There's a package that you want to make sure that you're improving upon and getting that as pretty as you want it as it can possibly be before you start having the conversations about credit. I guess it's the important thing to remember is when you borrow money from someone, from a lender, they want to know that you're going to have the money to pay them back. And that's going to be a part of the conversation. What your history shows that you pay your bills on time, and all of those things are so important. And you want to make sure you're concentrating on that. But remember, there are other factors, and that is, do you have the cash flow to maintain payment to these lenders? So what does that mean? Our credit score opens the door. Our cash flow and our ability to repay these loans or these credit cards or whatever the case may be is what's going to secure your approval. So it's a big picture that we're working on. Okay, so credit improvement timeline. Like we mentioned earlier, or like I mentioned earlier, this is not instant, and boy, do I wish it was. If only we could come up with a magic wand that we can just say, fix my credit, and it's fixed and ready to go. The next day, that would be awesome. But unfortunately, that's just not reality. So, in order to be realistic in this presentation and to allow you to understand the process as a whole, there are some typical timelines that we can kind of gauge our credit improvement on. So, for instance, if you do find some discrepancies on your credit report and you start the dispute process, once it's corrected, it's about 30 to 45 days that you start seeing a change in those scores. If you have fallen behind on some payments and you start to pick those back up and you're showing consistency, now you're paying on time, you're paying and you're lowering your utilization, that is going to take about 2 to 3 months to see a jump. You will see a jump, and it's an important jump, but it doesn't happen right away. So it's going to take some time. They really want to see that you're doing it and you're going to continue to do it. And then those positive payment patterns, improved credit mix and things of that nature, that's going to take about 6 to 12 months. So the process of improving our credit can take up to a year. With your consistent on-time payments and lower utilization, which are so important, you can usually see some changes within 2 to 3 months. It's important to address inaccuracies and lower utilization. Those are commonly the earliest signs of improvement that you're going to see pretty quickly. Okay, so credit reports. I can't see or hear you, but I don't know if everyone has had the opportunity to see your credit report, but just in case you have not, there are about 6 sections or so on every credit report that I will encourage you, once we talk about you getting your report, to look at and check and make sure that they are accurate, that everything you're seeing on there is true and correct. So the first section is usually your personal identification or identifying information, your name, your address, Um, your phone number, things that identify you as who you are, your social security number. Make sure you check that. That's also that can sometimes be a problem as well. And then you're going to find account history. So it's going to be broken up into the different sections of the different credit cards you might have, different loans you may have, etc. Each of them are kind of like a little block, and it will talk about what your balance is, what your credit limit is in that particular block, how much your utilization is often on there, so you can see that percentage. Um, your payment activity. So these all kind of fall under the account history in those blocks. So your payment activity, your credit limits. If there are any collections or charge-offs, you will find them there, something that you will want to address if you find them. There will be information on who you can contact within each of these blocks, and I encourage you to do that. Communication through this process is extremely important. Documentation of that, of those communications are important too, which we're going to talk about here in a little bit. And public records if there's any applicable that you don't see that very much. So if you do see, just to give you a definition of something, if you see a charge off, basically what that means is that someone has, that a creditor has kind of given up on this being paid and they've charged it off. I do see that there's a question. Let me see. So once a personal score is dropped 100 points, after how many months after completing student loan payments will it come back to normal? Um, that kind of goes back to that, and I can't say specific for student loans because I don't know that exactly, like specifically student loans. However, I would say again that falls in that 6 to 12 months, as it is a loan and you're picking back those payments. So I hope that helps. Um, Okay, so how do we access our credit reports? If you don't have access, if you have not accessed your credit reports, I encourage you to do so. There is a site called annualcreditreport.com. It is a legitimate site that you can use. Even though it says annual, you can actually get them much more often if you choose to do so, and that's not going to have any impact on your credit score. This credit reporting website will give you reports to your Equifax, your Experian, and your TransUnion. When you're reviewing these different reports, review them next to each other and make sure that you're seeing that the information is the same across each. You will find that some credit reports have different information than others. So you want to make sure that you go through each of them with a fine-tooth comb and that you're checking through to ensure that that all the information is correct. Another thing that I encourage my clients to do, if you have not already, is to set up some kind of a monitoring system. That would be something like Credit Karma. Most if all of our credit cards have that as an option. Many of our banks through our accounts have that as an option. So just set up one that you can monitor and ensure that you're seeing both the good changes that you're going to see as you're improving things, and if there's a change that's negative that maybe you didn't expect, it's good to catch it early. So having these monitoring steps in place is a great option or opportunity for you to be able to check and catch anything that might be happening. It also will help you detect any fraud. And certainly we want to be on top of that immediately if that is occurring at all. We already talked about what a hard inquiry is, so we'll just go ahead and keep moving. Okay, so I mentioned documenting your credit report errors. So what I encourage people to do is set up some kind of a tracking system for themselves. That can be a regular old notebook, pen to paper, that is perfectly fine. If you're comfortable with spreadsheets, that's also a great one. But what I want you to do is, as you're going through your reports, as you're working to improve things, etc., keeping very, very good track. So you'll include something that has the account that you're referencing. If there was an inaccuracy, what it was. When you found that inaccuracy, what action you took to rectify that, who you spoke with. what credit bureau you may have contacted because of that, and what your current status is. Because this is something, unfortunately, again, a process. I feel like I say that a lot during this presentation. It is a process. So you will find yourself going back probably 30 days later to see how things have improved, to maybe make contact with that creditor again, et cetera. And having those notes and having all of that documentation in one place just makes life so much easier. Okay, so let's talk about disputes. If you find something on your credit report that is inaccurate, that means it is just flat out not true. Um, that is what we call a dispute. So this is where you're going to actually say, I found that there's a credit card on here that I never took out. It's not mine. I need to tell you that this is not accurate and I need it off of my credit report. That is a dispute. You can do that through, oftentimes you can dispute through the actual credit reports that you're looking at online. There'll be buttons and you can go through the process there. Again, documenting what you've done. You also have the opportunity, you can simply find the information of that particular creditor and follow up with them by phone, keeping notes, of course, of who you spoke with. They often have email opportunities. So you have that paper trail. But like I said before, make sure that once you initiate that, you mark something on your calendar. In 30 days, you're going to recheck it, et cetera, et cetera. So dispute is a formal request to review and correct inaccurate or incomplete credit report information. Dispute is a true thing you found that is wrong. It shouldn't be on there, but you know that it's wrong. So that is accurate, an inaccurate statement that you're trying to make accurate. That's different than what I'm ready to talk about now, which is a goodwill adjustment. So there are some times that you might find on your credit report that life lifed, as it often does. And there were periods of time that maybe you did have a string of late payments and you've since been able to correct that and you're working to make things more consistent and on time. But these are isolated incidents and you're hoping that maybe you can go to that creditor and say, hey, I know I had a string of late payments. It just so happened that I had lost my job during that time, or something happened that you can kind of throw yourself on their mercy and say, can you please see that I'm doing better? And can you please help me to take that off of my report or improve my report? Remember, you're always, whenever you ask for that goodwill adjustment, you're actually acknowledging that I was responsible for that. And I just wasn't able to do those payments as I said I would for whatever reason. Give them an explanation of what your circumstances were and just a polite request for reconsideration. There's no guarantee that that's going to happen, but because it truly is up to the creditor's discretion, but it is worth taking the time to try because that can improve your credit score. In addition to goodwill adjustments, there's another thought, which would be medical hardship strategy. So this is kind of the same concept as the goodwill, except maybe it's related to something medical. So again, you find a string of late payments. It just so happens that was a time that you had fallen ill or you had to have surgery or something outside of the norm occurred from a medical standpoint that you are willing to have a conversation with your creditor about, that you're okay saying, here's my doctor's documentation. If that's appropriate or asked for, and you could ask for some kind of a reconsideration, whether it be removed from the report because you're doing better now, or maybe they can do, if you're living it currently, they can maybe do some temporary payment adjustments or can reconsider interest, etc. So again, it goes back to what we said before, and that is communication. You want to find these things on your report and have those conversations with people, which I know can feel very uncomfortable. Personally, I can say I've done it myself, and it's never a fun feeling in the stomach to give a call to a creditor and say, help. But there are people on the other end of the line, and they understand that things happen. And having those conversations, the worst that can happen is they'll say no. The best that can happen is you'll have a positive result. So take the time to have the conversations and the follow-up and the documentation, as mentioned. So just kind of break this down into one slide. A standard dispute, remember the information's incorrect. I looked, it's wrong. It needs to be fixed. Goodwill or medical hardship is the information is correct. However, I need it to I had extenuating circumstances. I'm asking you, throwing myself on your mercy to see if you can um, help to have that removed or fixed. Okay. So the next thought when we're looking at our payment or we're looking at our credit report is we've now looked and we've to, determined if there's anything inaccurate. We've determined if there's if there's things on there that we're not super happy with, and we want to see if they can help us with either a medical hardship or just a goodwill adjustment. And then when all those things have gone away and we still might have some issues that we want to address, disputes aren't an option. Now it's time to figure out an action plan. So if there are times that you, or even recently, that you're finding that you haven't had payment consistency, the first thing to do is let's start being consistent with the payments. Make an action, which we'll talk about, making a plan to make that happen. We see our balances, a next great step. Let's figure out a way to start lowering those balances, getting that credit utilization down. At this time, when you're in the improvement stage, just like we mentioned before, limiting new credit applications is where it's at. Hold off, get these numbers where you want them to be before you start applying for additional funding, because that is going to dip your score a bit. And you can use structured debt repayment strategy. That's something that would come into play here if necessary. There are two methods that we often suggest if the goal is, if we're at the point that we just need to get our utilization down, we need to get our payments lower, etc. One is called the debt snowball method. The other is the avalanche, which we'll talk about here in just a moment. So the debt snowball method is best for individuals who stay motivated by seeing accounts paid off quickly. So basically, the way we do this is you look at your accounts on your credit report and you determine the smallest debt balance first. So you have a credit card that has 1,000 on it. You have another credit card that has 2,000 on it and 3,000. So you're going to concentrate on that 1,000 first. You're going to pay the minimum balances on your other two credit cards, the 2,000 and 3,000. And then everything else that you can throw at that $1,000 balance is what you're going to do. So maybe you decide that I'm going to pay $500 towards my credit every month, whatever that number is. And so of that $500, you pay the minimum on the two higher balances. Then you go to your smallest balance and you throw everything else of that $500 at that until you get that one paid off. And then you go to the next one and the next one. You start to see those balances paid off. You get those credit card balances to zero, and you go to the next one. And that is a great way to start getting that paid off. So snowball method is for people that want to see accounts paid off quickly. The avalanche method are for people that want to minimize their interest costs. So same idea. Look at your credit report, determine your outstanding credit or outstanding credit cards, whatever the case may be, and then look at your interest rates on those and start to attack the highest interest rate card first. So same concept. I know I can pay this much a month. So you'll pay minimums on the others, and you'll look at your highest interest rate, and you'll pay all of the rest of that $500 towards that until you get that one down, and then you go to the next highest interest rate, etc. So that's going to stop you from paying more and more and more in interest. It's going to get the interest paid or off of you as quick as possible. So those are the two methods that we often suggest. In the event that you find collections or charge-offs on your credit report, remember, like we said, even whether you pay the collection off or it's charged off, it's probably not going to disappear from your credit report right away. So that is when you will want to have that, do the communication again. If you have a collection, something on your account that, or on your credit report that's in collections and it's still currently in collections and there's money to be paid, reach out to the creditor, set up payment plans, take notes, make sure you have the information of who you spoke with, and get a good plan in place, and start attacking those one at a time. Remember, this is a process. So don't feel like you're looking at your credit report and you have all these things you want to take care of and you need to take care of them all at once. It's a process. Figure out which one it makes the most sense to take care of first. Make sure that everything else is paid on time minimally and start taking care of these collections that need to be taken care of. Communication is key. Oh, and written confirmation is also important. So if you make a deal with one of these collection accounts, have something put in writing so that both sides know what the expectations are as you move through the process. There are some credit rebuilding tools that you can use in addition to lowering your utilization, paying off your balances, making sure that things are paid on time, etc. So if you want to see things happen a little quicker at the same time while you're moving all these, having these moving parts happen, or while you're working through each of these moving parts, there are secured credit cards or credit builder loans out there. One is called Self. I believe that is one that you can find that I think they actually have both the credit card and the loan. Self does. But basically what the premise of this is you, for instance, say I am going to deposit $500 of my own savings into this credit card or loan. From the credit card standpoint, you now have a $500 balance that you utilize. You use the credit each month, you pay it off each month. So basically, you're using your money to build your credit, and then they report to the credit bureaus that you're doing that. After a specific amount of time, whatever the oh my goodness, I can't think of the word. The terms of that particular credit or loan is. Once you've reached that, then usually that deposit comes back to you, and then hopefully you built some good numbers, and you can maybe get another unsecured credit card or loan. There's also something called Experian Boost out there that is not available for everything or everyone or everywhere. So you have to look and see if it is something that you can use in your location. But what that does is for maybe rental payments or your phone bill or things that typically aren't reported to credit reports, Experian Boost will report that for you. So as you're paying your rent every month on time, as your phone bill is getting paid on time, that will help to boost your score. So something to look into. Yeah, and a secure credit card, like we mentioned, it's backed by a refundable deposit. Okay, so that's kind of the personal side of things. So let's look at the business side. So businesses can and should have credit. You can start building that as soon as you're able. That doesn't take away the fact that they're going to look at your personal credit for a while and maybe forever, but they'll go further and further from your personal credit and more into your business credit as you build that and as you build time as a business. So the way to establish a business credit identity is a good idea to establish a professional business presence. So make sure that when credit cards that you're applying for through the business start to look you up, they find that you are out there. You have an email and a phone number and a website and a business address that they can verify that you're a business and you are doing business. You are someone they want to work with. Your EIN, which you probably, if you're already in business, you should have probably already had that done. That is going to be part of building this business credit. Having a business bank account, which you probably already have if you're in business, that is part of building your credit, your business credit. And then opening a business credit card in the business name, knowing that your personal credit is going to be taken into consideration, is another way. Get the business credit card out, use it for business purposes, pay it off, keep that credit scored up, make sure your utilization stays where it needs to be, etc. And then Duns and Bradstreet is a way that you can also get a DUNS number, which is a unique identifier that's used to track business credit activity. So if you haven't done that yet, Duns and Bradstreet website, you can get that set up, and that gets started for you. So a roadmap, a business credit building roadmap, establish your legal business entity. Some of these you probably have already done depending on where you are in the process of building your business. But so you establish your business entity, obtain your EIN, open your bank account, your business bank account, obtain your DUNS number at Duns and Bradstreet, Establish vendor trade lines that report payment history. So if you do have vendors that you are working with for supplies and things that you need for your business, see if they report. Some vendors do and some vendors don't. And maybe it would be something to consider working with those that do. So have that conversation when you're setting up your accounts, because if you're paying on time and they're reporting to the credit bureaus, then you're building your business credit. Of course, then obtain your business credit card and monitor your business reports, like I encourage you to do with your credit reports to make sure everything is accurate. Um, so strengthening that business credit, registering with reporting agencies like Duns and Bradstreet, open reporting vendor accounts, which we mentioned, making sure to pay your vendors on time, monitoring those reports, and then the credit reporting agencies that we spoke about, Dun and Bradstreet, Experian Business, Equifax Business, and vendors. Some vendors that we know typically, or at least at the time of this research, um, that do report would be Uline, Granger, Quill, Summa Office Supplies. Actually, I believe these are all office supply vendors, but these things change. So have those conversations when you're setting up your accounts with your vendors and check in with them every once in a while. Hey, are you still reporting? Because that helps you in the long run. Recently, the SBA has had some policy changes as to how they are evaluating businesses for lending for loans. So oftentimes, or before, it was pretty automated. Your credit score was it. If your credit score came in where they needed it to, then they would continue the conversation. And if it didn't, they wouldn't. That's changed a little bit, and that your credit score is still very important, but they are looking at that whole business again that we talked about earlier. So they're looking at your personal, they're looking at your business, they're looking at your cash flow. They want to see how your banking activity is. They want to see your financial statements. So your P&L, a balance sheet, cash flow statements are going to come into play from your history and from projections standpoint as well. They're looking at the whole picture, the whole business picture as they're preparing to loan. So a strong credit score remains important, but lenders are looking at your overall financial strength, the overall financial strength of the business. So score is important. The big package is also important. When you're considering doing or looking into funding, I always encourage my clients to do some vetting of the possible lenders as well. Have conversations prior to the process. Ask the lender, what is it that you're looking for specifically that I need to make sure that it is where it needs to be before I start these conversations with you. So you can have those conversations ahead of time when you're vetting the possible lenders. But as a general rule, major banks, they often rely heavily on those credit reports and financial statements. If you are looking at credit unions, they often have a greater emphasis on relationships and the capacity to repay. Alternative lenders, CDFIs, et cetera, they will look frequently are evaluating cash flow, business activity, and business credit. So again, it's important to have those conversations to prepare to get your whole package, the whole business looking the way you want it to do before you really start digging in and doing the application processes, et cetera. Back to our technology and automation, it's important again, and I can't stress this enough. I really want to make sure that this is a focus of your business. We as business owners have so many things going on all the time. So what I would encourage you to do is make an appointment with yourself using some technology and automation as a tool. So the credit monitoring alerts that we talked about, get something set up so that it's giving you alerts if you need to. Tracking spreadsheets, go ahead and get that set up. Make sure you're keeping your documentation, but also calendar reminders. Set an appointment with yourself, maybe once a month on a random Thursday. You've set an appointment with yourself that says, I'm going to spend an hour and look at my credit situation and see and make an action plan for this month of what I'm going to attack. Um, Having those appointments with yourself that you hold will make sure that you focus on this and you're able to build the credit that you want moving forward for funding. We often tell our clients to make those appointments for themselves for financial tracking, maybe combine it. So maybe you do a financial tracking every Friday, maybe the third Friday of every month, you also add your credit monitoring. But just keep, it's important enough that you keep that appointment with yourself. And the flip side to making an appointment, you don't have to think of it about it any other time. So on a random Tuesday, if you're thinking about your credit, but you know that you're going to work on that the third Friday of every month, then you can let that go on that Tuesday and you can work on something else that the business needs and know that you're going to address it that at the next appointment. It's also important to celebrate progress. As you're going through these processes and you're seeing changes on your reports, you're seeing changes in your overall financial package, it's important to say, I'm doing this. This is hard work and it takes concentration and it takes organization. You can do it and you will do it, but give yourself the grace to know that I'm working really hard and I'm proud of the fact that my score is improving. Or I am so glad that I was able to get that account settled. It's important to pat yourself on the back and continue to encourage yourself as you work through this process. Small improvements have meaningful long-term results. Consistency is important. Small improvements are also important. So if you want to dig in, I've just got a little sample here of something that you might think of over the next 90 days. So month one, between now and even this week, pull your credit reports. You can do that at that annualreport.com. Just pull them. You'll have them there. You can start reviewing them. Maybe month two, you decide that I'm going to reduce utilization. Make that your big focus for that, or you're going to address outstanding issues. Month three, you're going to start building positive history. Just make your goal be to create sustainable credit improvements. Improve your habits, improve your goals. And just remember that progress for this is often measured in months, not days. So go easy on yourself. Be happy when the small wins happen and know it's just going to take a little bit of time. If you go into it with that mindset, it will go quicker than you think. The fact is, a year from now, it's going to happen. It's either a year from now, you're going to have done these steps and feel a little better about the situation, or a year's going to happen, you're going to be in the same boat. So you might as well just take the small bites and set your goals and achieve them. There are things out there that promise to improve credit faster and easier. It's important to know these red flags and know, I think the most important piece of this is if it sounds like it's too good to be true, it probably is. Please make sure you're vetting any of these kinds of programs. Make sure that you read reviews. Make sure that you go to the Better Business Bureau. If you decide that you're going to work with one of them, it's fine, but make sure that you know who you're working with. Instant score increase claims are probably not real. We talked about that ad nauseum today. The reality is it takes time. You also disputing accurate information. You don't want to dispute things that are accurate. If you know there's something on your credit report that is true, even though it's not favorable to you, don't dispute it as if it's not true. It's just going to set you back in time. Don't waste the time doing that. As we mentioned, excessive credit applications, try not to do that, especially during this time when you're trying to improve credit. Just don't apply for things at this time. If you have to pay something upfront fees without written agreements, maybe look further into that. Make sure you have things in writing so you know what your fees are going to. Again, if an offer sounds like it's too good to be true, it probably is. So just make sure you take the time to vet. Don't be a victim of someone offering or promising you something that's not true. And just like we had our 90-day action step, you could do within the next 7 days, you could do something as simple as I'm going to pull my reports. I'm going to set up a time to monitor them. I'm going to list any potential inaccuracies. I'll contact one of my creditors to get that fixed, or I'll reduce one of my balances. Small actions taken consistently produce meaningful results over time. Resources that we've mentioned, annualcreditreport.com, SBA.gov has great information. You can always check into that. Dun and Bradstreet is going to be the website that you go to set up that business DUNS number. And consumer CFPB Consumer Resources is also a great resource for information. And also, as a part of this, I want to make sure that I share with you that if you need or desire business support, there is, through the SSBCI program, access to no-cost technical assistance that you can access by simply using this QR code and registering. If you scan the code, complete the registration, you will then be matched with a consultant that can help you with your business needs as they exist, help you with this process, maybe credit improvement or preparing to get a loan or whatever the case may be. You will receive customized guidance to help your business grow. It's no cost to you. It's through the SSBCI program. It's just support for your business. So feel free to reach out through that registration and we'll get you connected to a consultant that can help. Does anybody have any questions for me? It was a lot of information. I guess you can do them through the question and answer box. Yes, I do believe, and Christy, I don't know if you can hear me, but I do believe that this is being videoed and you will have an opportunity to get this information again. So yes, you will be able to replay it and access to,
Yes.
yes, okay, and access to the
Yeah.
slides as well.
Yeah, so it is being recorded and we are going to post it on our YouTube channel as well as send this link to that YouTube replay through Eventbrite. So you will get a post webinar follow-up. Everybody that registered and attended will have the link to the video.
Thank you, Christy.
Absolutely, Terry. Yeah, and if you guys have questions, remember you can post them in the Q&A. I believe you can also raise your hand and I can take you off mute. Haven't tried that before, but we'll test it out. So whichever way you're most comfortable. Darlene, it does look like you have another question in there.
Yes, for my business, I got a report from an organization called NAV. It's wildly divergent from the three credit agencies. Do banks use that one? I am not sure. That is not one that I've heard of, so I'm not sure how to answer that question. I can do some research. I apologize. I don't know the answer to that.
I have never heard of that one either.
Anybody else have any other questions for us? Well, thank you all so very much for coming. I hope this was helpful, and I hope that you have a little idea of what your action plan is going to be moving forward. Do take advantage of registering for the technical support that's being offered through the SSBCI. We would be excited to work with you, and we hope to hear from you soon. We'll give you your 12 minutes back.